traders, welcome again to the Safari. In this video, I will teach you how to make money in the forex market. In this video, I'll teach you the following key concepts. The first thing, the demand and supply theory. The other thing, get to know when to sell and when to buy, and lot size calculations. Lastly, we have a practical example how to calculate lot size. So stay tuned, subscribe to the channel if you're new here. Don't forget to like and comment to the video. So let's get started. The first thing you should know is how the demand and supply theory is applied in forex. Forex, like any other financial market, depends on the demand and supply theory. It is a very simple theory. You can Google it, you can read it online. I didn't want to teach it because it's a bit out of range, it's a bit out of trading, but you can use it in trading as well. So before you go any further, pause the video, go online, Google what's the demand and supply theory, then understand it, then come back to the video. Let's continue. It is necessary to understand the law of demand and supply as a starting point of your profitable trading. This is due to the variation of strength of currencies, which causes changes in demand or supply of a particular currencies. As a primary idea, we say that we buy when supply is low and sell when demand is high. We use the strength of the base current in a quote to determine the demand or supply of the currency, hence predicting the direction of the market. So now that you know what's demand and supply, we use it as bulls and bears in forex, and we use it to determine which currency is stronger than the other, so that we can determine the direction of the market. So let's go to the next slide. Currency strength and direction of the market. How do we determine the direction of the market? We use the currency strength to determine where the market will go next. As usual, guys, we are not so sure, we're just speculating, because that's the whole point of trading, that we are not sure what the market is going to do. But according to technical analysis and other form of analysis, we can predict where the market will go next. So let's see how we can use the currency strength to determine the direction of the market. In forex, currencies are in form of quotes. Strength of the base currency influences the direction of the market. Example, euro dollar, the base currency in this quote is the euro. Therefore, we consider the strength of the base currency over the other currency in the pair during making trading decisions as to buy or sell. If the market is bullish, this means that the base currency has gained strength over the other currency, hence taking the market price higher. When the market is bearish, this indicates that the opposing currency has gained strength over the base currency. So it is as simple as that, guys. You just know if the market is bullish, this means that, and if the market is bearish, this means that. Now that you know this, let's go to the next thing. Okay, here is a very key concept when you're starting trading. I remember myself when I was a beginner. I hustled a lot just to grasp this simple concept, because I searched online like the whole day trying to find a video which would teach me how to do this, but I couldn't find one. So that's why I'm teaching this today. It might be simple, it might be an easy concept to grasp, but it is very necessary in your trading. When to buy and when to sell. In forex trading, buy orders are executed when traders speculate currency pair or the price to appreciate. So what we do in forex, we try to speculate price movements. When you speculate that the price might go higher, what you do is you buy, and you put your take profit high above where you expect the currency to reach. That's what you do. And when you speculate the currency price to fall down or to go to lower lows, what you do is you sell, and you place your take profit down below your entry point. So sell orders are executed when traders speculate a fall in price of a certain currency pair. As you can see in these two vivid examples right here, somebody bought here, now the market price went up higher, so these would be profits for him. If somebody sold here, the market went on further going downward, which means that would be profits for him. So that's how you should know when to buy and when to sell in the forex market. It is a very simple concept, but it is very necessary for beginners because I know the hassle they are going through trying to grasp the forex trading theory. Okay, the variation or volatility of the price is due to strength or weakness of the base currency on the quotes. Volatility is something else I'll teach you on the coming videos, but for today you should just know that the direction of the market depends to the strength or weakness of the base currency. Okay, now that you know what is forex, now that you know how to place a trade, how to start trading, there's a very key concept that many traders come in forex trying to figure out how much they can make in forex. Before you do that, you should know first how to calculate your profits in the forex market, how profits are made in the forex market. So before we dive deep into profit making, it's necessary to understand the following concepts. The first thing you should understand is pip and pip value. Also, you should understand lot size. Lastly, you should understand risk per trade. Excuse me if I'm going so fast, but we have a lot to do and the video is getting a little bit longer, so I should try to go a bit faster. Understanding the above concept is crucial to your trading because any of your profits and loss depends on these key factors. Okay, as I said earlier, there are three concepts. The first one was pip and pip value. So what's a pip? A pip is the smallest change in the market price. When the market goes high or low, the change in market price is what you call a pip. While trading, profits will be counted in terms of pips gained, while losses will be counted in terms of pips lost. Yep, if you're using MetaTrader or any other platform, the pips you gain will be indicated by positive numbers, and the pips you lose will be indicated by negative numbers. So yeah, that's what pips means. We have an example right here. A trader placed a buy order on the price 10768 and closed on the price 10800. To get the number of pips, to get the number of pips made, deduct the closing price with the opening price. In this case, the number of pips made would be 32. So that's what you do. You take the closing price, you deduct by the opening price to get the number of pips made. Simple as that. Okay, now we know what's a pip. It's time to understand about the pip value. A pip value is the value of a single pip in a certain currency pair. Each pip has its value in real money, in real cash. So it depends on the currency pair, but the good news is that it is a calculated value. For most quotes, it's $10, and there's no need to go through all this hassle because there are plenty of online calculators, and just for free you can use them. You can download the applications and use them for free. So that's what I personally do, because when something is there for free, what you do is grab it and use it for free. Lot size. Lot size is the volume of units that you wish to get involved in the trade. Lot size are divided into A. Standard lot size, that's 100,000 units. Micro lot size, that's 10,000 units. Mini lot size, 1,000 units. And lastly, nano lots, 100 units. In forex, the lowest lot size is the mini lot, which is represented by 0.01 in trading platforms. If you're using MetaTrader, it's on the top left corner. It's indicated by 0.01. You can adjust it by tapping the button that to make it to go high or low. So that's what you're trying to calculate today. You should know what lot size is suitable for your account, well, what lot size is safe for you to trade. To calculate the lot size, you need to know how many pips you are willing to risk according to your strategy. We call that stop loss, and the percentage amount of your account that you are willing to risk per trade. This calculation can also be done by online calculators, so there's nothing to worry about. There's no hard math right here. Okay, the other thing you should know is risk per trade. Risk per trade is the amount in percentage of your account value that you're willing to risk each trade you get involved in. Each time you place a trade, there's amount of your account that you are willing to risk, so that you might get a profit out of it. So we determine risk per trade from the winning rates of the strategy and risk tolerance of an individual. Therefore, nobody can recommend what amount of your account should be risked every time you trade. So this is some sort of individual thing, but as a pro trader, I recommend use use like 2% of your account. Just risk as low as you can, because you never know how much you may lose. So you should try to keep it as low as you can. We have an example right here. A trader decides to risk 5% of his account on each trade. The trading account is worth 5,000 USD. His risk per trade will be, so we have some calculations right there, and you see the risk per trade is $250 for each trade. Okay traders, now that you know what is risk per trade, it's time to see what is it good for. The first thing is, risk per trade is very important component of your trading, because it will help you to determine the position size. The position size accounts for your profits or losses. As we said earlier, lot size may amplify your profits and may also amplify your losses. So risk per trade will help you to determine how much you are willing to risk every time you place a trade. Every time you enter the market, how much are you willing to risk? So you should determine this from your strategy, and on your own your personal checkup, you should see how much can you tolerate. So I highly recommend that you use very minimum risk per trade, as 5% of your account, or maybe 2%, but it's actually up to you. So let's continue. Position size calculations. Now you should see how to calculate the position size. As I said, there are online calculators, but if you just need maybe to verify if they are correct, if they're not, you should use this formula. It is a very simple formula. You can just pause the video and copy it somewhere and use it later on, and you can apply it, because every variable in the formula I've taught you about. We have seen what's value per pip, you know what a stop loss is, you know what is percentage risk per trade, so you can easily calculate the position size by your own. And also, to make this clear, position size is equal to lot size. So when someone says position size, he actually means lot size. Now let's get a practical example. Let's go to the charts to see how you can integrate all these things that we learned today, and in the end of this video I'll show you how I personally calculate the lot size from my mobile phone. So stay tuned. Thank you for being here until now. Hello again traders, welcome to the charts. Now let us apply what we just learned. Let's apply it on the real-time market. Let's see how we can use it to make our trading better. So as I said earlier, there are a few things that you should notice before taking a trade. The first thing is, you should count the number of pips that you are willing to lose or to risk on that particular instance. At this instance, I'll be using this blue line right here as my stop loss, because that's a level that I do agree that's a primary resistance level. As you can see, it has been tested multiple times back in historical data. So what we can do is calculate the number of pips, which is 1, 2, that's 15. Now that we have 15 pips, now it's time to calculate the lot size. How do you do that? We have that formula in the other video. No, it's this video, just the past few slides. You can go back and see that formula and apply it. But if you don't want to use it, I'll show you how to use the mobile phone to calculate the lot size. So the other thing you should have in place is your risk per trade. I would recommend everybody to use as low as he can or she can, but personally I always use 2% of my account as risk per trade. So let's go to the mobile phone. Let me show you how I do it very quick, just like 2 minutes, and we will be done. So stay tuned and stay blessed. Now I just want to show you real quick how you can calculate the lot size on your mobile phone by using this application called FOREX calculators. So let's see how we can do it. Go ahead and click it, wait for it to load a little bit. Takes a little bit of time, should be patient. You should make sure that you have internet connection for the application to work. So takes a little bit of time. There we go. Okay, so now you have some fields that you have to fill in so that you can calculate your lot size. The first field is the account currency. You can choose what currency you use for your account. If you use euro, if you use pound, if you use yen, you can go ahead and click there.
but in this case we are using dollar. Go ahead and click it, and you should remember what pair do you want to trade right now. In the pair we used in the tutorial was USD/CHF. Go ahead and click it, and you remember to put in the account balance. For that particular account it was 500 USD, and we got the stop loss of 15 pips. And here's where risk per trade comes in, because you should fill in the amount of your account that you want to risk, and I am always risking 2%. So there we go. By doing so, I think you're ready to calculate the lot size. Let's see what we get. We calculate it, you wait for it to load a little bit, then we get your answers. So we have position units, which is 6,459 units. That's the amount of units that you want to get involved with. And amount to risk should be 10 USD, because $10 is 2% of 500 USD. So that's how much I'm risking per trade. We just put it in percentage, that's why we call it risk per trade. And now you should take your lot size, which should be 0.06. That's the one that you should use for your trading. Thank you so much. Thank you for being with us up to the end of this video. Don't forget to subscribe and like this video if you found this content helpful. Stay tuned, stay blessed, stay safe. Thank you.